Hello and welcome to It's No Secret. Today we are joined by Carly Ellis, financial advisor, insurance specialist, and best of all, mum. Now, Carly has recently joined us on the podcast. If you skip back one, you'll hear our first episode about all things death. And is joining me again on the podcast to chat about insurance generally. So for those of you who are regular listeners of the pod, you will know that Kat and I often chat about insurance and, well, debate whether we need certain types or don't need certain types. And you might also know that I am currently in the process of getting some cover myself. So I'm really excited to get all my personal questions answered by Carly. So today's episode, the question that we're answering is, which personal insurances do I really need? That is inclusive of things like trauma, life, income protection, health, and insuring other people potentially. So to set the scene, I would love to jump into what are the types of insurance. I know I've just rattled off a few, and then how do I, like, pros and cons of each, and then how do I decide what I need?
Yeah, cool.
Big question.
Yeah, I mean, and there's so many, and heaps come out all the time. So,
yeah.
The way that we typically look at it is, I can't remember what the industry calls it, but I call it the death slide. So that's, it's from, if we look at the top of the slide, that's when you're in optimal health, you're feeling really good, day is carrying on as normal.
Yeah.
If you drop down one, you start noticing something's not quite right, you need to see some, you go to your GP and they don't know what's going on, so they're referring you to some, like, a specialist. Now, that's where health insurance starts. So health insurance looks after you if you need to seek medical advice or treatment or diagnostic testing, for example, outside of the public system. Why would someone want to go outside of the public system? Primarily, it's the wait. So there can be a wait time. It's all based on severity. So if you're not dying or close to, you probably won't be seen very quickly.
Yeah.
And then it's around, like, access to equipment. So public system, obviously the government's only going to fund what you need, not what you want. Like your mum with your Nikes and your whatever. Yeah. So that the type of equipment that's available might not be as accessible through the public system. Yeah. So private health insurance will step in when you're feeling a little bit rubbish. Now, if we go down one step, if you are so unwell that you're unable to work because of either illness or accident, that's when a type of insurance called income protection will step in, and it will pay you a portion of your income for a stated period of time. And that's just to keep the expenses covered and keep the roof over your head and, keep the lights on and whatnot.
Yeah.
Cool. So that can be for any reason, right? Yeah. Anything that your doctor keeps you off work for. If it's really bad, so what they call a critical condition, that's what trauma insurance is. And that is a lump sum payment, right? One-off lump sum payment, and that can cover conditions like cancer, you have a heart attack. I mean, most often it's cancer. That's what we usually see people getting a trauma claim for. But it covers around 50 different conditions, strokes, neurological issues, anything like that, right? Keep sliding down the slide. Keep sliding
we're still on the slide.
We're
There's more.
Still on the slide. There's more to come. If you were totally and permanently ever able to go back to work again, there's another type of insurance for that. And that's called total and permanent disablement, or TPD.
Oh, yes.
Right?
Kat has talked about this before. Yes.
Right, yeah. So commercially dead, they used to call it vegetable insurance because you'd have to be really, really bad to be able to get it. And, often when you're in that type of position, you are more expensive than if you were dead, right? Because you're still incurring all the additional costs, probably more costs, but to keep you alive. And all the normal day-to-day essential expenses are still there as well. So that can be a big one, total and permanent disablement. And then right at the bottom, where 100% of us are eventually going to end, is death. So that's where life insurance steps in. If you pass away, you or your estate or whatever gets a lump sum amount of money to do what they need to do with it.
Yeah, okay.
So that's personal insurance in a bit of a nutshell.
Yeah, nice. Yeah. And so where does insuring, I guess, other people sit on that scale?
You can insure anyone for any of those things.
Oh,
so you can insure yourself for them. With kids, as you mentioned, we highly recommend it. As soon as a kid is born, you get them health insurance.
Yeah.
And there's a few reasons for that. One is that they don't, it's really easy to get them medical insurance when they're a baby because they don't have any pre-existing medical conditions, hopefully.
Yes.
when you apply for health insurance as an adult or even as an older child, you have to disclose anything that's ever happened to you medically. And that becomes what's called a pre-existing condition or an exclusion on your policy. So, kids get all sorts of stuff. They get tonsillitis, they have ear problems and they need to get grommets, they have respiratory stuff going on.
Yeah.
Any of those things that happens in childhood, if you were then to take out a medical policy when you were older, it's likely it wouldn't be covered by your private insurance. So get in early, preferably before 3 months, and you won't have to answer any of those questions for your child.
Yeah.
The other reason is that they're very cheap, and some providers will offer what's called community pricing until they're 21. So your child will pay the same at birth right the way until they're 21. Mm-hmm. Their premium will not increase. The only difference can be between a girl's premium and a boy's premium. That's just because they've got different things going on.
Is one more expensive than the other?
Girls. They've got
pink
more
tax.
bits. Yeah. Here we go again.
Yeah, right.
Yeah. I mean, we've got...
Can't help
more,
myself.
Yeah. Just more stuff. More stuff internally. So, So, again, another good reason to get them on the books as soon as possible.
Can you insure kids when you're pregnant? Like, can you?
Well, they will have, some providers will provide you some insurance for your pregnancy.
Oh, yeah, okay.
And usually it's only going to cover complications. So if your child was born with specific conditions or potentially didn't survive for long after birth, or there was a miscarriage as well, you can sometimes get insurance payments for that.
Oh, yeah, okay.
It would be part of your bigger insurance, so it would be like a built-in benefit of your life insurance, for example, would cover some newborn complications and things like that.
Right, okay. And so in terms of other people, what about business people?
Yes. So yes,
is that a personal insurance?
Yeah, well, it's termed business insurance because where the money flows will be to a business.
Yeah.
But if you've got a business and you've got key people within it, and you have concerns about like the revenue continuing if those people weren't able to come to work, you can insure them, and they might think that's pretty creepy. You put a dollar amount on their head, and you do. You have to, we take the amount of revenue that the business has, and we divide it up into the key people, and we put that number on their head. 100% you can do that, and we see that all the time. Is you might have 50% of your revenue might be dependent on your salesperson, so you've got an amount on their head, and if they're unable to work or if they pass away, you'd get a lump sum amount of money to either get a locum in or, recruitment costs or whatever it is. Just keep the business running while you found a new person, I guess.
Yeah, interesting. Interesting. And so I guess assessing the slide.
Yeah.
Where do I even start to think which one should I have? Do I need all of them? Like, do I literally start at the top and then ask a couple questions to go down each step?
You will likely need all of them, right?
Yeah,
and I'm not just saying that trying to, sell a lot of insurance. Everyone has a need for them. It's just how much are you willing to self-insure?
Yeah. And
how important is it if the event did happen to you? Because for different people in different life stages, the event or the claimable situation, I guess, could be covered elsewhere outside of insurance. Insurance is just transferring the risk of something happening to somebody else, the financial risk. So, I mean, you can get them to all work together. You want to, again, work with a smart advisor that knows how to dovetail them all in together so that you don't have overlapping covers. You're not paying for overlaps because, that's just a waste of money.
Yeah, fair.
But you're likely to need most of them, or you can cover the need with maybe 2 different types of insurances. So you might be worried about being off work because of you've been diagnosed with cancer and you can't work.
Yeah.
Well, there's 2 ways that you can cover that. You can either get income protection that will pay you because you're not able to work, or you can get trauma insurance, for example, and that's going to give you a lump sum amount of money if you're diagnosed with cancer And you can use that amount of money to cover your expenses while you're off work.
Yeah, cool.
So
So it's kind of like a balancing scale, really, dependent on what you feel more comfortable with in terms of like when I think of income versus trauma, I think, well, would I prefer to have it all at once, or do I want to have my income guaranteed for X amount of time? But then also there's usually a stand down period with income protection,
that's right. Yes.
Yeah.
And there's a little stand down period with trauma as well. So,
Oh,
income protection, you usually have to be off anywhere between sort of 2 to, you can push it right out to 6 months if you want it to be 2 weeks to 6 months.
Yeah.
Most people do between 8 weeks and 13 weeks of, surviving on your own steam, because that's usually your emergency fund, for example,
Yeah.
or sick leave or annual leave.
Yeah.
Trauma insurance, you have to survive whatever you've been diagnosed with for 14 days before you'll get the payment, because if you don't survive, it's a life insurance payment.
Yeah, right. So, so that's how they work together.
Yeah. So there are stand down periods for each. And then it's around the breadth of cover, because income protection covers you for any reason you're off work, related to illness or injury. Trauma insurance is say 50 or 60 specific conditions at specific severities.
Yeah, right.
Yeah.
Yeah, okay. And how much do each of them cost?
Depends. So there's a few things that will be factored into it. One is age. Most of it's age, gender, smoking status. So whether you're a smoker or not. So interestingly, if you smoke or vape.
Also, vape is included now as well.
Yeah. Any what's called shisha, any of that kind of stuff, all included. If you're inhaling a vapor or anything like that.
Any fumes.
Yeah. You're considered a smoker, and that will double your premiums.
Double, really?
Yep. That's how much the actuaries, so the smart people that decide how much you should be charged, they perceive the risk to be double if you smoke or vape. So they will charge you appropriately. So if you wanted to, the best thing you can do for your health is get rid of smoking or vaping. Yeah. So there's a financial incentive if there's ever going to be one.
Yeah, right.
And typically in terms of cost, if we start at the top of the slide, that's the most expensive.
Yeah.
So health insurance is usually the most expensive cover that you'd get.
Yeah.
And then again, life insurance is usually the lowest cost.
Yeah.
And it's all around likelihood of the event, right? So from the insurer's perspective, you're likely to claim on your health insurance a lot. You're likely to claim on your life insurance once. So yeah.
Oh, this makes so much sense.
You've got to flip over to the other side, the insurance company side, and put the commercial hat on. Yeah. Because they're not a charity.
Yeah.
They're betting you. Well, you're betting them that you're going to die or get sick, and they're betting you that you're not.
Yeah, right.
But they get to fully assess the bet, and you're just going on what you believe to be true.
True. Yeah, right.
So that's why they're not going to take on anyone that's got health issues or anything like
huge
that.
risk.
Yeah.
2 questions on that. A thought that I've always had, because I have health insurance and I'm a big advocate for it, just because I like to heavily invest in it. I always wonder, what is the balance between actually claiming on your insurance versus not? And how that contributes to historical, exclusions being let go of versus, for example, when I was younger, I played netball a lot and I would sprain my ankles, and going to physio and things like that, that was all covered by health insurance. But the more I claimed, the more longer it would be a pre-existing condition to then be taken off my policy, right?
Yeah. So like I said, if you had childhood injuries or whatnot, there's been a long period of time between claims, then sometimes they'll review it and they'll say, oh yeah, obviously it was a childhood thing. Like eczema, for example, they might go, oh, that was obviously a bit of a childhood thing, so we'll remove any exclusion for skin issues or whatever. Yeah. But if you're still claiming on it, they're going to look at it and go, well, you're going to keep, we're going to start paying for that now? I don't think so. So yeah, that's why they'll exclude it. Yeah. And they'll be more mindful as well, because it's been a long-term injury. It may have started as an accidental injury and now it's turning degenerative, which means that ACC won't cover it. So now they're going, oh, here we go. Here comes a knee replacement or a hip replacement. So we're going to exclude a whole leg, for example. I don't know. I've not seen that, but.
Yeah, right. Okay. Interesting. I'm so I'm going to be careful what I claim.
But don't be as well, because you're paying for it. Yeah. And there's no no claims bonus or whatever with health insurance. You 100% should be putting your foot down and getting as much as you can out of it.
Well, and that's the thing is with health insurance specifically, I'm well, I can write off my chiropractor and physio, and I'm entitled to a gym like what is it called? Like health benefits,
Yeah, yeah.
and stuff like that. So I'm like, I'm basically like reaping back the cost of the monthly payment.
Absolutely. Yeah. And that's the other thing.
Yeah.
Again, you need to be aware of what's wrapped into your policy, because
Yeah.
when you buy a policy, or when we, advise you on one and you get one set up,
Yeah.
we're telling you about the top level benefits, because
Yeah.
that's what's important to you. That's where the value is. And that's the main reason that you're getting it. But
Yeah.
within all of those covers that I've just spoken about are so many built-in benefits.
Yeah.
So, for example, income protection. If you were off work, for example, you don't just get thrown a monthly amount of money. You get an entire rehab team around you. So you get occupational therapists, psychologists, nutritionists, personal trainers if need be. You get this, like some
Yeah.
insurance companies have pre-booked meetings and appointments with all of these specialists so that they can just roll their clients
Nice.
into them whenever they need to. So,
Yeah.
you've got to be aware of the wider benefits. If you're in bed, there's like a bed confinement benefit of like, I can't remember what it is, but it's hundreds of dollars if you're in a hospital bed for longer than 72 hours. Like, so many things.
Yeah.
It's just
Wow.
ridiculous.
Okay. I had no idea
Yeah.
that was all of that was included.
Health
That's interesting.
insurance, if you have
Yeah.
to go to, so the way health insurance works, it doesn't cover acute stuff. So if you have
yeah.
a heart attack and you need to go to the hospital, they'll take you to a public hospital and they'll get you well. But if it's uncovered through that event, through that investigation, that you've got like a cardiac issue or whatever, you can then see a private cardiologist. But to reimburse you for the inconvenience of staying in a public hospital, they'll give you $300 a night. For
Wow.
the time that you've spent in a public hospital eating the rubbish food. So there's a whole lot of things. So when we catch up with clients and we do a review, those are one of the questions that we ask. Have you spent any time in hospital? Have you gone to a chiropractor? Like most claims, there's no statute of limitations on, so you can go back like 5 years as long as you've got the receipts. And
Yeah. Right.
yeah,
Interesting. I might look back into my receipts.
bank statements.
Yeah. So I guess on the subject of cost, you can insure yourself for different like levels of cover or dollar amounts, i.e. $50,000 for trauma versus $200,000.
Yep.
How do I go in deciding how much I need to be insured for?
Well, again, hugely personal.
Yeah.
And it depends on what other insurances you have in place and what the
Yeah.
plan is for that amount of money.
Yeah.
So usually we say if you don't have any income protection, if you've got no health insurance, things like that as well.
Yeah.
If you're looking at purely trauma insurance and maybe some life insurance, you need to have around about 5 to 6 years worth of trauma insurance available to you. And the reason for that is that if you're diagnosed with something and it's unsurvivable, usually that time to from diagnosis to death is around 5.8 years, I think it is. So we say if you can cover yourself financially for that 6-year period, then you'll be okay.
Yeah.
And then your life insurance will kick in. But
Yeah, right.
you might have income protection, so then you don't need to worry about replacing your income. You might have health insurance, so then you don't need to worry about paying for medical costs.
Yeah, right.
So again, it's all just a balance, and it's a balance of affordability and acceptability of risk.
Yeah.
So, some people don't want any risk and some people are happy to self-insure.
Yeah, right. Interesting. Okay, that's good to know. So many thoughts mulling over. Okay, cool. So what happens to your insurance policies if you decide that you want to move overseas or if you're moving back to New Zealand from overseas?
Okay, so to take out an insurance product, you have to be in the country of origin. So if you're taking out life insurance, health insurance, whatever, you have to be in New Zealand to do so.
Yeah.
If you go overseas, it depends again on what type of product you've got. So typically life insurances, trauma insurances, they are worldwide.
Yeah.
Health insurances nowadays, most will have coverage within New Zealand and Australia.
Mm-hmm.
You may, if you're in Australia, you may have to get pre-approval. So you can't just go to the specialist and expect reimbursement. You need to get it all approved before you go.
Yeah.
Some health insurers are also allowing you to go anywhere else. So they'll cover you in New Zealand dollars, right? So they'll say 70% of what it would have cost in New Zealand is what we will cover if you go to Sweden, for example. And it may be cheaper to do whatever you want to do in Sweden. So it might make sense.
Yeah.
Or Sweden might be home. So you want to be able to read the language on the at the supermarket or whatever. So yes, so health insurance sometimes. Income protection's the weird one where usually they're going to ask you to come home before you can claim. And the reason being is if you're too ill to work over wherever you work, they want to be able to manage your rehabilitation over here so that they can get you back to work. It's really important to get you back to work for two reasons. One, commercially, they want to get you back to work so they stop paying you. And so if you start being off work because you had a bad back, because of something, you fell off a roof or something like that, very quickly it can slide into mental health issues because you're depressed now and you're seeing your friends still going out and spending money and you're having to sell your bike because you can't afford to keep up, blah, blah, blah.
Yeah.
So, again, another reason why they want you home or back in New Zealand before they'll pay out your income protection.
Yeah, right. Interesting. And you were saying the other day that mental health as an exclusion for income protection is very common.
Yes.
Yeah.
Yeah. And more so now because we're talking about it. So we're going to our doctors and we're seeing people.
Yeah.
We're talking to counsellors. It's a healthy thing to do.
Yeah.
And if I flip over to the insurer's perspective, most of their claims, their long-term insurance, income protection claims are due to mental health.
Yeah. Right.
So that's another reason why they tend to exclude if there's been any whispers of mental health issues in the past. They'll go, oh, we're nervous about taking this person on. We'll exclude mental health for them.
It's so interesting.
Yeah.
How do you know if you're getting a quote-unquote good deal or not? And my thought process was there's so many advisors, so many options, so much fine print. Help me.
Well, I mean, as with anything, if you're paying less, you're usually getting less. So that's just a thing to be aware of. But a really good point around so many advisors, and we all have our different styles and we all have our different ways of doing the same thing, as I was saying around the covering income with income protection or trauma. So first of all, you need to find someone that you've got a really good relationship with, because that's where you're going to build trust. And it's going to be, that relationship's going to be really important because they're going to be the one that's going to be putting in claim forms if anything does happen. They're going to be the ones that are turning up on your family's doorstep if you do die, to sort out the money and whatnot. So get the person right. You're going to get a good feel whether they're the right person or not and whether you can trust them.
Yeah.
And then there's a few other things that they have to do, right? So they have to disclose how they're getting paid.
Yeah.
So if they're getting paid from an insurance company, they need to tell you how much they're going to be paid by that insurance company and, why they choose to use them. And they need to have really compelling reasons why they choose to put you with a particular insurance company.
Yeah.
And I guess when it comes to reasons why we would put you somewhere, there's going to be specific benefits under there. So, for example, if you've told us that you are planning to have children in the future and we're recommending you a product that doesn't have something to do with maternity care, you need to be questioning that, right? Because you've told us that's important.
Right.
We need to make sure that policy is going to be correct now and in the future. So things like making sure the policy wording is guaranteed.
Yeah.
Super important so that the insurer can't go changing things on you.
Yeah.
In terms of premium, this is one I kind of left for last, is because it's such an easy lever for different insurance companies to pull in order to attract new clients, and it depends on what phase they're in terms of new premium attraction.
Yeah, right.
So they may go, oh look, year 1 and 2 we'll make it super cheap, and then we've locked them in because they can't move because they've got pre-existing conditions, and then we'll ramp the cost up. This is me just again thinking with my weasel brain. So while premium might look really awesome, now you need to know or have some type of forecast of what it's going to look like in 10 years' time. Yeah. Because you're getting this insurance while you're healthy and you're young. In 10 years' time, things may have happened to you that prevent you from moving to another insurance company. So you want to be sure that you can still afford the premiums. Yeah. So we'll do a comparison. We'll do a forecast. And I guess, that's kind of the key things to think about. If you're paying less, you're usually getting less. Yeah. Don't be attracted by first-year premiums. Make sure that you're aware of what's going to happen wider. And then make sure it's sustainable. So you make sure you can make changes in the future when you're older. Yeah. Outside of just reducing how much you're insured for.
Yeah, right. Yeah. Okay. Interesting. Oh, I'm just absorbing it all. I'm like, yes.
Find someone you trust and you can honestly just offload all of that worry. Yeah. Because,
I think the values piece is really important of something that I definitely value in terms of you need to have a good rapport and relationship and trust, I think, is built over time as well. Yes. Yeah.
And that's why that needs to be someone that you're happy to sit down with every year. You don't want to have to be like, oh,
Yeah.
here comes that slime ball again,
Yeah.
trying to like sell me more stuff or whatever. You know,
yeah,
like,
yeah. Yeah, literally. Okay, cool. So that kind of wrap up question. How do I find an advisor that cares about me versus the kickback that they're getting? So what are red flags to look out for? So you said the premiums, but is there anything else that you would?
Yeah, red flags would be if an advisor was pushing me to a particular insurer, you know, a lot, or even if you're having that preliminary chat with an advisor and you ask, you know, who do you use?
Yeah.
What insurers do you use? If they can only give you one or two,
Yeah.
that's kind of a bit of a red flag.
Yeah, okay.
Unless they can give you really, really good reasons why they only use one or two.
Yeah.
You want to make sure that they've got the market at their fingertips because they can see what's happening. And if they're only using one or two, it could be for one or two reasons. One, they're the people that pay the highest commission.
Yeah.
Usually that's how we're paid. We're paid by the insurance company for a successful policy being put into place. It's like a success fee for bringing you to their door.
Yeah.
So, I mean, there's been a lot of regulation changes in the last 2 or 3 years, which kind of prevent anyone doing too much of a dodgy deal in terms of kickbacks. We have to disclose anything that we do. We have to disclose how much commission we paid. We have to disclose whether they take us out for dinner or lunch, or nothing can be above a certain value and everything like that. So I think the chances of that happening is pretty low in this environment. I don't think you need to be too worried about that.
Yeah.
And everyone's super nervous because it's such a new regime that, you know, the FMA are probably eyeballing it quite closely. So
Yeah, right.
yes.
At what point do they disclose how much they're getting paid?
So the process is they'll get some information out of you, which is called a fact find. They'll build a recommendation and then put it in what they call a statement of advice.
Oh, yeah.
And at that point, they'll disclose how much they will be paid if you take the policy out.
Yeah.
Right? That you don't have to pay that. That's paid by the insurance company.
Yeah.
Again, it's a bit of a funny one for a reason to disclose because there's no major difference in the industry between how much an insurer pays.
Yeah, right.
It's all pretty static.
Yeah.
But at that point, before you take the insurance out, you'll know how much they're going to get paid. And it shouldn't sway your decision because by then you should be quite aware of
Sold
why you're
on that.
taking it.
Yeah, for sure.
And if they haven't hit the mark on that, you kind of probably need to move advisors anyway.
Yeah. Yeah. So last question, I promise. So let's say I've got my policies set up, but I want to move advisors or I want to change, you know, my policy. Like how hard is that to do? And, you know, what's the process?
Yeah, this is a bit of a sticky one, and I don't know if I'm like spilling industry tea or whatever,
okay.
So
yes, we'll take all the tea, thanks.
So when you sign up with a particular advisor, you become part of their book, right?
Yeah.
So you become kind of an asset of theirs.
Yeah.
And if you decide that actually I don't really like that person, I'm going to move.
Yeah.
You may choose to go to a new advisor, but they won't be reimbursed at all for looking after you, doing any of your servicing, or helping you at all, providing you with any advice. They won't be reimbursed unless you take out, say, new cover, for example.
Right.
So most advisors will say, we will take you on as a new client with existing cover.
Yeah.
However, you're going to have to arrange the sell of you as an asset over to us. Otherwise,
oh, wow.
Yeah,
okay.
it's really, really murky. It's really ugly. Some people just avoid it and they just take on new clients and just don't get paid for them. Not a smart decision financially because it can actually be quite expensive.
Yeah.
But it can actually be really expensive to buy an existing client off another advisor. They expect quite a lot of money for you.
Really?
Yeah. So, you know, if you want to go to a new advisor, you know, don't feel sad if they say that they don't want you. It's not you, it's them.
That's always it, right?
Yeah. It's more about the politics that exist in the background,
right,
than it is about taking you on as a client. So again, be very choosy who you go with for your cover because they will continue to receive commission on your policy for as long as you keep your policy in place.
Right.
And if you think the guy's a dickhead or the girl's an idiot, then they're gonna, you know, there's not much you can do to stop them getting paid from you.
So if you have to arrange that switch, do you have to pay that fee to or who pays it?
Yeah, I mean, we haven't really crossed that line too much because that kind of tends to be something that clients go, oh, well, I don't want to do that. And then the conversation sort of flows away. If we really like the client or not like, it's not like a like thing. If we think that there's a good relationship there, they may bring more business or whatever into the future, we'll just suck it up and we'll buy them. But again, there needs to be some type of return on investment, I guess, from that transaction, I guess.
Do you, as the advisor, get so let's say you buy the client, do you get then the reoccurring payments after that?
Yeah.
So you would kind of weigh up, well, how long is the term of this thing going to be?
Yes.
And then how much of the payments am I going to get relative to how much does it cost to buy them?
Yeah. And if it makes sense, then you'll do it. But yeah.
I find it really interesting also from a marketing perspective because therefore as an insurance advisor, you basically have to get new leads all the time. You can't really rely on repeat. Well, technically it's a repeat customer, but it's fill the top of the funnel rather than worrying about converting them down. I mean, you need conversions obviously to get paid, but interesting.
Yeah. Because it's far more difficult to take on someone else's client and move them to a new insurance company. That's how you'd get paid. You'd move them to a new insurance company. And that's where some of that's a good one about dodgy people. Sometimes they'll say to you, you need to move insurance companies. And they're only doing that because that's the way that they'll get paid. Yeah, it may not be your benefit. That you may end up with a policy that's got exclusions or all sorts attached to it. So
so
beware the dodgy advisor.
Yeah. Ask good questions is what I'm hearing.
Yeah. And honestly, I would say all of that has been ironed out with this wave of regulation. So I don't think you'd see any of that happening anymore. People are just, advisors have raised their, standards, I guess. Yeah. A lot of them were already at a good standard. There were just a few bad apples running through and doing stupid stuff. So
every industry, right? Yeah.
Exactly. So, I think you'd be fine.
Yeah,
You'll be fine.
Okay. Love it.
It's all about relationship. Find the good relationship. The products will just flow out of it.
Yeah, cool. Yeah. Okay. Love it. Thank you so much for spilling all the tea. I really appreciate you answering all the questions. If people want to get in touch with you, where can they find you?
They can find me at Ungaro & Co, Ungaro & Co. We are based up in Freeman's Bay, but we do appointments nationally. We're all on Zoom these days. So
cool. So head to the website and send you an email.
That's
basically,
it. Yep.
You'll be able to find her on the About Us section. Can speak from experience. Cool. Thanks for listening, and we'll see you guys next week.